Bitcoin's price action is still looking relatively weak. Will the price continue toward the downside upon the weekly candle close, or can the bulls reclaim some strength? Let's go ahead and jump into the video. Okay guys, welcome back to the channel. Thank you for tuning into today's video. I hope you're all having a fantastic weekend. In today's video, we're going to be discussing the weekly candle close occurring in just over 1 day, the high time frame charts, the daily charts, and of course, the short-term price action, discussing the most likely and probable move based on the technical and structural data available as of right now. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant news events. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the third link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in loop with cryptocurrency, with Bitcoin, and the relevant economic news. If you are interested in the VIP channel, we post our trading setups with exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis. You can see entries, targets, and stop losses are actually given. Not only will you get access to this group with over 600 members, you'll also get access to our group chats, our general chat, our trading chart and education chat, our trade setup chat, our news chat, our video chat, and our help chat. If you're interested in getting access to all of those groups, including the main VIP channel, go ahead and contact me in the pinned comment in the free channel for more info. Let's dive into the video, guys, starting on the market data. How are we currently looking? So overall volume is actually very low. This is a very low weekend volume, sitting at a total of 23 billion. This is down 45% in the last 24 hours. So overall, the market is very slow right now. Liquidations are down 65%, sitting at a total of 16 million only. And we're sitting at 4 million of those liquidations in shorts and just over 11 million in long positions. 11 million in shorts, 4 million in long positions. With the massive reduction in volume and of course the low volume altogether, we do expect consolidation, we do expect compression before that next move leading into the new week. And next week is going to be a very important week for cryptocurrency and Bitcoin in general, as we are actually approaching that weekly candle close, but not only the weekly candle close, the position of which where the price action is. And the price action is sitting under some very important technical levels. And if we do close that weekly candle below these levels, that could spell pretty big bearish strength of Bitcoin, pushing the prices lower. We'll come back and discuss that in more detail. Moving over to the volatility index, we can see on the 30 and 60 day, not too much really changing here on the short time. We can see on the 30-day period, the volatility index is still kind of pushing downward slightly. And on the 60-day period, the volatility index is still pushing sideways. So again, not too much happening. Keeping an eye on it, watching for surges in volatility. Moving over to the DXY, the DXY had a pretty strong close of that daily, actually pushing back over that uptrending resistance, right? We broke below it, so support became resistance, and we pushed back above it upon the result of the CPI data. The CPI data came in very bullish for the DXY. Again, this is going to be bearish, indicating inflation was back on the rise. This actually pushed the DXY back over to reclaim that support. Now, watching the DXY going into the new week, the DXY continues upwards. We could definitely see a target of around 107 to 108. If we do break back down, that could provide some relief for the markets. So overall, knowing that there is an inverse correlation between the DXY and assets, if we're looking at the DXY right now, above support, moving in an uptrend, we have to have some degree of a bias towards a downside move in a new week for assets as of right now, according to this chart. If we do see the DXY drop, that could change that bias. Moving over to the S&P 500 and the Dow Jones, because the S&P 500 did see a little bit of a bounce from that uptrend. We actually closed that weekly candle just above it. But just like Bitcoin, we are at risk of dropping back below this uptrend on the weekly, and just like Bitcoin, we are coming close to that major weekly deciding point. If we do lose this trend line on the weekly chart, that will confirm that this 1 year long uptrend has been lost and we will see a continuation lower. Again, guys, if we do see a breakdown, our measured move analysis tells us we can see a move all the way down to these low prices, 3,800 even. But again, our first target, as you know, was of course 4,300. We entered our shorts. We were looking for rejections over here. We look for targets at this level. We said that we could see a bounce over here. We do need to lose that weekly to confirm the breakdown. We saw the DXY drop momentarily, which caused that S&P 500 chart to bounce. But if the DXY continues upwards, we will see a continuation toward the downside for the S&P 500. The same goes to the Dow Jones. We saw a momentary bounce from this major area of support. We bounced upwards. We did not break over that bullish trigger point. This area is still going to be acting as a resistance. If we do reject from here, we can expect a price continuation even lower. Again, this upcoming week is going to be crucial in determining where the assets are likely to go over the next 2 or 3 weeks. So definitely watch out for the upcoming week. So all of that on the high time frame. Let's talk about Bitcoin, right? So I wanted to briefly interrupt today's video to discuss the 2 exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Bitcoin is also in a very crucial position, not only on the monthly, but also on the weekly. Let's start on a monthly. So the monthly right now, we've got 17 days remaining until the monthly close. What we can see as the most important levels on the monthly chart are our 32K horizontal resistance, and of course, this 25.2 to 25.4 50 EMA. If we lose that 50 EMA, we're very likely to confirm deviation above, and we will likely continue toward the downside. If we relate this to our high time frame structural chart, we can see the 50 EMA on the monthly is actually sitting at 25.2. which represents the upper level of resistance of this 480-day long support level. That is right, a 480-day long support level. It actually represents the base of support of the cluster of price action between March and present, and of course the base of resistance from June all the way to March. So again, it's an over 1 year long level. It's a trigger level, meaning we remain relatively bullish above, we remain bearish below. This is a trigger point between a shift in a weekly bullish trend to a macro bearish trend. So we do lose this level. This will be catastrophic for Bitcoin and push the prices much, much lower. Again, we don't want to see that happening, but if it happens, it happens. It is what it is. We can't control the market. We would like Bitcoin to go up personally, but again, it doesn't matter in this game. We have to follow what the data says. So again, guys, moving back to the monthly chart, if we lose that 50 EMA, that will be very, very bad for Bitcoin, signifying a lot of weakness. At the moment, the monthly chart will not look strong until we break above that 32K level. We break above 32K, we're pushing all the way up to 48K according to historical price action patterns. Moving over to that weekly chart over here, we can see on the weekly chart, we have just under 1 day. So we're 23 hours and 57 minutes until this weekly candle closes. The current price for Bitcoin is 26,863. As you can see, the current price of Bitcoin is sitting underneath the weekly 50 MA, underneath the bull market support band on the weekly, and underneath the Gaussian channel upper band. All of these levels are crucial that the bulls will have to reclaim to gain overall strength. Remember, if the bulls are able to push the price above 28.4, that will not only break the upper band of the Gaussian channel, sending us into an uptrend, but it will also result in a breakout of this trigger point, which is a 28 to 28.4 horizontal resistance. You can see a trigger point here, meaning when we broke above this level, we saw a surge in volume up to our resistance, okay? When we broke below this level, we saw a surge in volume down towards our support. So it is a trigger level. Determining a breakout over here will result in a strong move towards our supports or resistances. We took a short over here. We expect a continuation down towards support if the bears can continue that bearish strength. So moving back to the weekly chart one more time, guys, really, really important. I can't stress this enough. I can't stress how important this is. If we do not close this weekly candle above that 50 EMA, that is going to be 3 of 3 indicators that are now officially suggesting we are in a strong downtrend, okay? 3 of 3, so we're definitely watching out for that. If we do see a correction all the way down to the midline, that is sitting at 24.4. 24.4 is going to be the lower level of the horizontal support. Remember, 25.2 is the upper level. That represents the monthly 50 EMA, okay? The monthly 50 EMA. And 24.4 is a lower level, and that represents the Gaussian channel midline. If we break below the Gaussian channel midline, we generally flow through the Gaussian channel. What does that mean? If we see the price actions above it, okay, we break into it, we move to the midline, we break below the midline, we generally push under the lower band of the Gaussian channel, okay, before we breach the upper band again. Now, you're probably wondering the monthly chart, okay, weekly chart. Let's go to a daily chart. We'll show you exactly the same thing. How many times has this happened on a smaller time frame? We break below the Gaussian channel, we lose a midline, we always end up under it prior to breaking back above. Same goes over here. We break into it, we lose a midline, we end up under it prior to breaking back above. Remember, when we break back above the Gaussian channel, this signifies a strong uptrend. When we break from below into, this break into it signifies a uptrend developing, okay? So same to the downside. If we see a break into it, it signifies a shift from a uptrend to a downtrend, and then when we break under it, it signifies a strong downtrend. So that is how we use that Gaussian channel. Moving over to the small time frame price action. The price action had broken down from a pretty important level, right? We saw this rising channel formation develop on the high time frame, and we saw an eventual breakdown. We expected this for quite some time. If you've been following the channel, you would know we identified this as a rising channel all the way back over here. We said we are going to expect 5 points. We had point 1, we had point 2, we had point 3, we had point 4. And I said rising channels are bearish structures. They represent an overall uptrend, but it is generally an exhaustion pattern, meaning we expected a 5th point retest down on the lower band, making it 2 to top side, 3 to bottom side, a valid 5-point rising channel. We saw the breakdown, and we have seen the price drop a decent amount ever since, right? If we take a look at a measured move analysis, we can see, according to the measured move, we do expect this move to take us down to 25.2, provided, okay, provided the current downtrend does not break beforehand. The current downtrend is represented by this solid diagonal trend line. If this solid diagonal trend line breaks upwards, that will invalidate, this breakout over here will invalidate the 25.2k target. Until then, we still expect a continuation toward that level. Taking a look at this over here in the VIP, you can see we actually shorted at 28k, and we have made a considerable profit on that already. Again, guys, resistance is resistance until it is not. This was resistance. We saw consolidation under resistance with decreasing momentum. Now, a lot of people told me, Whale, this isn't weakness. This is accumulation before we break up. But I tell you one more time, do not determine the strength of price action based on how the price action looks. Look at the metrics behind the buyers and sellers. If we see accumulation, quote-unquote accumulation, or what I would like to say consolidation under resistance, but we see falling volume delta and we see falling momentum. That represents weakness. It tells us the bulls are not gaining strength, they're actually losing strength against the bears at this level of resistance. What does that mean? It means the resistance is too strong for the price to push upwards. Eventually the bulls will lose strength and the price will correct downwards, and that is exactly what we saw. If we take a look at the immediate smaller time frame, we are now seeing a similar kind of thing, right? We see a horizontal consolidation. We have 0.1 retest, 0.2 retest, 0.1 retest, 0.2 retest. Perfect. We have a rejection, and we have top side deviation. This top side deviation, and I do call it deviation because it was as a result of some ETF news. It was a news event that came out saying that the SEC cannot, I think it was, appeal the ETF decision for Bitcoin when it does come out as per a court order. So that was obviously received as quite bullish. We saw the price massively skyrocket within like half a minute maybe. A lot of people, $70 million in longs were opened up in this position, and the price massively corrected. Again, guys, I tell you all the time, news events are not to be trusted. News events are to sway public emotion and make you and change your decisions. If you're making your decisions based on news events, you are literally the last person acting, okay? In a game of trading, it is about being first, it is about being early, okay? If you're basing your decisions on news events, you have to understand there are thousands and thousands of people, there are millions, hundreds of millions of dollars that are positioned before you who knew about those news events, who are planned and prepared, and those news events, basically, it's a liquidity trap for you. Do not trade news events, completely avoid them if you must, like I do. I do not trade news events at all, I just completely avoid them. Going back to the chart over here, we do see a horizontal channel. Now, a horizontal channel is a bearish structure over here, because we broke in toward the downside. So we do have a slight bearish connotation attached to the structure, since we have broken inward from the top side down. We expect that trend to continue toward the downside. So it isn't a massive statistical advantage towards that direction, but it is a small statistical advantage. So we see a few percent higher probability of the trend actually continuing through the patterns, and therefore we should be identifying, resistances are chances to short rather than breakouts are chances to long, okay? Moving over from there, we can see we have a relative uptrend developing on this chart over here within this structure represented by the dotted trend line. We can also see on our RSI, the momentum has shifted negative, right? We're seeing a breakdown over here on the RSI, 0.1, 0.2, major points, 0.1, 0.2, okay, 0.3, we saw that breakdown on the RSI signifying a negative momentum shift. So once more, we have horizontal resistance, okay, at 27K level. If you watched our prior video, back over here, we said we expected a rally on the short term back to 27K. We saw that. We have horizontal resistance up over here. We have weakening momentum at resistance. We have a uptrend that is likely to break down due to the fact that we have seen a breakdown in the RSI. Where is the probable direction? The probable direction is going to be down before up. Now, we could see that move upwards. It is the weekend. The market is always sporadic on the weekend because it is low volume. Low volume equals easy to manipulate. However, according to the structural and technical data, what we have to trust, what we have to trade off, it is suggesting a little bit of weakness over here. I will be more inclined to look for a correction over here in the short term than a crazy rally. Now, if we do see a break above 27K, I would have to assume the next break above 27K due to the fact that we have seen obviously a support, we have seen a rejection. I would expect this now to be a valid horizontal resistance. Therefore, another break above this level, I will take at face value, and I will say if we break above 27K again, I will expect a move upwards. To retest, let's take a look. I'd be looking for around 27.5 to around 27.7. I'll be looking for this little range over here. We'll go ahead and draw in this little range low, very small range to this range high. We're looking for this area again, according to the VIPV. We can see this is the most shallow area on the VIPV2, suggesting an area of untapped liquidity. So we could see a move into that range if we break up at 27. Even if we see that move, we will not have penetrated that downtrending diagonal resistance. And therefore, if we zoom back out again, while we remain underneath that downtrending diagonal resistance, we are in a downtrend and the price is likely to continue toward the downside, provided that downtrending diagonal resistance remains as a resistance. I think that is where we're going to leave it though, guys. A little bit of a shorter video today. I hope everything makes sense. We've gone over pretty much everything on the short term. Be ready, okay? Be ready, be aware, be prepared. Watch the weekly candle close. Less than a whole 24 hours away, 23 hours and 50 minutes. By the time you're watching this, probably about 23 hours. Watch that weekly candle close. It is significant. It is actually relatively important. If we fail to hold these levels, that kind of speeds up this bearish scenario, and we could see a full-blown correction, right? A deeper correction from here could take us towards this trend line, could take us to 26.2, could take us to 26, could take us to 25.2, and of course, if we do lose this major area of support, we're only going to drop lower. Now, we do have some levels of support around over here, like we said. We have the 25.7 lower cloud leading span of the Ichimoku cloud. That could provide some degree of support, but again, unlikely to, as we will have a negative momentum shift according to the lagging span. The price action is underneath the baseline and conversion line, suggesting relative weakness, and we do have a red cloud open up, again suggestive of overall weakness. So we don't really have a lot going up for us for the bulls. For the bulls to really take back control, again, for the bulls to really take back control and make this chart look strong, we need to get above 28.4. It's a must. I really do have nothing else to say. We can look at the short term and say, oh, we see a little bit of strength, but if we look at the high time frame, if we say we want to see Bitcoin go to 30, we want to see Bitcoin go to 40, go to 50, for that to even start, we need to see 28.4 reclaimed. If 28.4 gets reclaimed, we will see a weekly shift in strength. Right now, we're in a weekly downtrend, okay? We will see a weekly uptrend, and we can develop into a monthly uptrend after that occurs, okay? I'll leave it there, guys. Thanks for watching. I'll catch you guys in the next one tomorrow. We'll talk about that weekly candle close. Cheers.